Right now, Americans 62 and older are sitting on a record $14.6 trillion in home equity. Most of them will never touch a dollar of it, not because they don't need it, but because they believe one thing about reverse mortgages that isn't true. They think the bank takes the house. It doesn't. You keep title. Your name stays on the deed the whole time. You can pull cash out of your home, make no monthly mortgage payment, and still own the place the same way you own it today. So if you keep the house, how does the lender ever get paid back? Well, that's the part most people get wrong. Stay to the end, and I'll show you exactly what happens at the end of the loan, because that's where the real questions live. In this video, I'm going to show you how a reverse mortgage works in 2026, who holds title, how the money reaches you, how much you can get at today's rates, and how the loan gets settled without you ever writing a monthly check. I'm Josh Borba. I've spent 23 years in the mortgage business, 20 of them on reverse mortgages. I'm a broker, not a lender. That means I shop multiple wholesale lenders instead of selling you one company's product. Keep that in mind. It matters more than you think, and I'll come back to it. Here's the fear and the exact words I hear across my desk. If I do this reverse mortgage, the bank owns my home and my kids get nothing. And I get why people believe it. The name is half the problem. Reverse mortgage sounds like something flips and the house goes the other way. It doesn't. In the most simple terms, a reverse mortgage is just a loan with an option to make a payment. That's it. It works like the mortgage you already had, with one difference. Instead of you paying the lender every month, the lender pays you or sets money aside for you to draw on when you want it. Think back to your first mortgage. Did the bank own your house? No. They had a lien as a legal claim that says, when this property sells, the loan gets paid back first. You still owe the home. You could sell it, paint it, refinance it, leave it to your kids, or do whatever you want with it. A reverse mortgage uses that same structure. The lender holds a lien, you hold the title. Your name stays on the deed. You can list the house tomorrow if you want, and the day it sells, you pay off the balance and keep whatever's left. So who owns the house? You do. Write that down if you need to, because every other fear about reverse mortgages comes from getting this one wrong. The next question I hear is, fine, I keep the house. How much money can I get, and who decides? There are three numbers that decide it: your age, your home's value, and the current interest rate. We use what's called the expected rate to determine the amount available. First, let's start with age. The older you are, the more money you can get, because the amount is built around how long you're likely to stay in the home. A 62-year-old and a 78-year-old with the same house get very different numbers because the older borrower will get more money. Next is home's value. The lender uses your appraised value or the federal lending limit, which is lower, whichever's lower. For 2026, that limit is $1,249,125. If your home is worth more than that, the math stops at the limit. If it's worth less, it uses your value. Essentially, the HECM gives you no value above the $1.2 million amount. Third is the interest rate, but more specifically, the expected rate. This one's tied to the 10-year treasury. The higher the rates, the less you get. The lower the rates, the more you get. Today's expected rate sits around the high 5s to low 6s. Put those three together and you get a number called the principal limit. That's the total the program makes available to you. It's not the cash you walk away with, so hold that thought, because the difference trips up a lot of people. Here's a real example of today's rate. 70-year-old with $500,000 home and no mortgage. Principal limit comes in around $190,000. It's roughly 38% of the home's value. Your number will land somewhere else based on your exact age, your value, and the expected rate. As a side note, the market will fluctuate while your loan is in progress. If the expected rate improves between application and closing, we'll give you the benefit of whichever provides the most proceeds when we get to the closing. It's important to run your own numbers through someone like me who can access software that can provide a detailed proposal. Now the part that trips people up. The principal limit is the total available. Your proceeds are what's left after we deduct two things. First, any mortgage liens will be paid off by the reverse mortgage. Then closing costs are deducted from whatever proceeds remain after the payoff. So if you still owe $100,000 on that house, the reverse mortgage clears it, and your proceeds come off of whatever remains. And clearing that old payment is the whole reason a lot of people do this. They erase a monthly mortgage payment and free up cash flow that was previously allocated to that payment. You get to decide how you take the money. You can choose a lump sum, a line of credit, you draw as you need it, monthly payments to yourself, or a combination of any of these. The line of credit has a feature most people miss, which is one of the most powerful aspects of this product, especially when it comes to financial planning. The unused portion of the line of credit grows over time, which means the longer you leave it alone, the more you can borrow later. That's the sleeper in this whole program, and almost nobody talks about it. I recently had a financial advisor tell me that the growth rate on the line of credit was what changed his mind to start including the reverse mortgage in his overall financial planning with his clients. One more thing here, and it's where being a broker pays off for you. There are two tracks: the federal HECM program requires a borrower to be at least 62 years old. However, if there's a spouse under 62, there are protections provided to them as a non-borrowing spouse. There are proprietary products, also known as jumbo loans, that start at age 55. In many states, and they go up to $4 million and possibly higher based on exceptions. So if you're between 55 and 61 or sitting on a high-value home, a direct lender can only show you what they carry on the shelf. I can shop all loan options and tell you which one fits. Whether 55 works for you depends on the product and your state, so that's a conversation, not a guarantee. With proprietary products creeping up to almost 50% of the market share, it's a conversation that should be had with every borrower because it doesn't just work with higher value homes. If this is the first time reverse mortgages have made plain sense, subscribe. I break these videos down every week and drop your age and state in the comments, and I'll tell you which track you're likely on, HECM or proprietary. Now, the question I promised I'd answer at the beginning of this video: if I keep the house and I make no monthly payments, where's the catch? How does the lender get their money? There's no catch, but these are the rules. And you need to hear them straight, because this is where people get burned by salespeople who gloss over them. You make no monthly mortgage payment. That's real. But you still own the home, so you're still responsible for property taxes, homeowners insurance, HOA dues if applicable, and general upkeep of the home. You do have to live there as your primary residence. If you stop paying your taxes, let the insurance lap, or move out for good, the loan can become due and payable. That's not fine print. That's the deal. And I'd rather you hear it from me now than learn it later. But now this: if you stop paying property taxes with any mortgage, you can also lose that home. That's not just part of having a reverse mortgage. So when does the lender actually get paid? When the last surviving spouse sells the home, moves out permanently, or passes away. At that point, the loan becomes due. The home gets sold, the balance gets paid off, and here's the part that matters most: whatever's left over belongs to you or your heirs. Two more things people worry about, and you should know the answers to. First, your spouse. If one of you isn't on the loan, there are non-borrowing spouse protections. They can let the remaining spouse stay in the home after the borrower passes, as long as the conditions are met. This one is extremely important, so be sure to let me or whichever lender you're working with know about your entire situation up front, including any spouses and their age. Second, what if the loan balance ends up higher than the home is worth? Your heirs don't owe that difference. These loans are non-recourse. That means the home stands on its own as the collateral. On a HECM, your heirs can settle by paying the loan balance or 95% of the home's current value, whichever is less. If they want to keep it, they will never get a bill for more than that. If they'd rather sell, they sell, pay it off, and keep the rest. So walk it back. You keep title to your home. You pulled out cash, you made no monthly payment, and the lender got repaid at the end from the home itself, and the lender will never get more than the house is worth. That's the beauty of this product. Let me close the loop that I opened at the beginning of this video. Who owns the house? You do, start to finish. 3 steps. 1, title stays in your name. Lender holds a lien, not your deed. 2, you use the money how you want, whether that be a lump sum, line of credit, monthly payment, or combination of those. And how much depends on your age, your home's value up to that $1.25 million loan limit, and the rate. And 3, the loan settles at the end, with your home being the collateral and your heirs keeping whatever equity is left. Keep the house, use the equity, owe nothing monthly. That's how a reverse mortgage works in 2026. Here's what I would do next. Your number is personal and rates move week to week, so a generic figure online won't tell you how much you really qualify for. Book a call and I'll walk you through both loan types, HECM and proprietary, to show you what fits your situation. No pressure, no credit pull, just nothing to get a real estimate. I'll left a link to schedule a call with me below so you can get a full written breakdown with the current numbers. Whether reverse mortgage is right for you depends on your situation, and that's a conversation worth having before you decide anything. I'll see you on the next one.